Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandoilguy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Well, let's take a look at gold. It seems to be doing quite well lately.
Yeah, gold's been on a tear. Really, we were kind of expecting late December and January to have a strong or a rally in gold. It was oversold. A lot of things pointing to it kind of being overdone to the downside. And kind of you and I talked about this several weeks ago, actually, in December. We talked about the deja vu, January being similar to last year. Now, we haven't seen equities sell off. We have seen them trade sideways. But we've seen gold take off just like last January. And gold's had a nice run today. If you look at GLD, it's January 17th, Tuesday. We've had a big gap up in the GLD, which is gold price. It's gapped right up into a gap window, a big gap down that happened back in November. And typically when you get a gap fill, especially after a 21-day cycle, which is what we've had from the low in December, usually that signifies we're probably at resistance, and we're probably going to see a price reverse down and have a little bit of a pause or pullback. Overall, I am bullish on gold. I think we've seen a significant pivot low back in December, so all I'm looking at is a little bit of softness in price before it continues to go higher.
Is that just to give people a bit of breathing space?
In gold price, do you mean the pullback?
Yes.
Yeah, all it is it's had a significant run, and there's usually when you hit a key resistance zone and it rallies for a certain amount of days, there's normal cycles in the market, all because of earnings and money rotating in from funds every month and all these different things. And 21 days is kind of a significant turning point. And after a run that long, usually that first wave of everybody kind of moving in, you usually see kind of things take a breather for a week or two. So it's moved so far for a certain amount of time that certain wave of individual, of trader, investor has all kind of chased and moved in and is now in position. And people are just simply going to start to take some profits and sell it here at resistance and let it fade back down a bit, or at least consolidate and build another launch pad, more or less, for it to start another run higher. So all it is some breathing space, some profit taking, whatever you want to call it, I think over the next week and a half or so.
What's the effect, Ben, of Trump saying the U.S. dollar is too strong, and right after he said that, the U.S. dollar fell quite a bit?
Yeah, obviously a falling dollar definitely helps commodities and precious metals specifically. The U.S. dollar is still bullish. The trend is still firmly up. It is looking oversold today. It looks getting ready for probably an oversold bounce here. But if he plans to keep raising rates, I can't see why the U.S. dollar isn't going to continue. This is probably more or less a buying opportunity in the U.S. dollar index. It's oversold, got pushed down with news. It's at support. And if they're talking about raising rates, which he still could raise rates even more in 2017, they're planning for it, higher rates means a stronger dollar. So all this is really is a bullish pullback within the U.S. dollar index, just pushing things to a short-term oversold extreme.
What about other currencies with the U.S. dollar drop today? The Canadian dollar, the euro, the pound, all had really strong bounces up.
Yeah, well, yeah, I don't follow the currencies in great detail, but obviously everything kind of moves. One will have a strong rally, the other ones, go in the opposite direction. The dollar and the euro, the Canadian dollar's had some strength. Obviously, the crude oil holding up is a good sign for it. So that's kind of really helping hold the Canadian dollar up.
Yeah, so far this year we haven't had $8 cauliflower, so that is a good thing. with the price of oil, the Saudis are making noises that perhaps their 6-month agreement to keep prices up and cut production may end exactly at the end of that 6 months. Won't that put oil back in exactly the same bucket it was in a few weeks ago?
Yeah, possibly. Overall, the big picture of crude oil is it's been trading, sideways for more or less a year in a fairly large range between $40 and $52 a barrel. I think it could very easily continue to oscillate here. Overall, the trend is up. It's short term, it's kind of neutral here, but I feel as though crude oil could continue to inch its way higher, and we could probably see that $57 per barrel level in the next couple months as it kind of squeezes up there. That'll be a big gap fill from way back in 2015 and a major resistance zone. And, eventually crude oil, I think, if we have a big economic crisis, I think we'll probably see crude oil get slammed, and it might not be till price gets up to that $57, $60 per barrel level. But overall, the trend is up, and it's going to take some pretty bad news to really hurt the price of crude oil, I think. I don't think the whole OPEC, that stuff, I don't think it'll play too much into it.
What about this tough talk going on now between the U.S. and China about China building these artificial islands in the South China Sea? Is that going to affect crude?
I haven't followed any of that. I have kind of heard a little bit about it, but I don't really know enough about it to really comment on it.
Transportation stocks, how are they doing?
Transportation stocks have been on a tear, and I think, obviously if Trump is pro-business and these transportation stocks are exploding in price, I think that goes to show that there's going to be a lot of oil used, which I think transportation typically lead the markets. And I think that's one of the reasons I am really bullish still on crude oil to continue to climb up several more dollars per barrel, is because this sector is so strong. It's taken a breather since early December. It's been kind of consolidating. In the last week, it's had a nice pop on very strong volume. That sector, the IYT Transportation Average ETF, it's a big volume pop in price. Big money is accumulating, and it looks as though that momentum is shifting to the upside and is ready for another big run. And I think if we see that take another big run, I have a feeling we're going to see crude oil probably run with it.
We'll have more with Chris Vermeulen right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, I've heard diverse opinions on what's happening with bonds. Some say it's a dangerous bubble. Others are saying, oh, they could be a safe bet. What's your position?
I did like bonds for quite a while, but really since kind of November of last year when things really started to get weak with bonds, they kind of broke down. I'm not a huge fan of bonds anymore at this point. I am kind of bullish short term for bonds. I think we did put a low back in December. It's a safe haven play. So we've seen bonds, we've seen utilities, we've seen precious metals all bottom and rally together. And this is kind of what I was talking about back in November, that we're looking for bonds and gold and utilities more or less to bottom in December, January, and start to rally. And I have a feeling for bonds, it could just be a relief rally, just a reaction high, meaning it's going to bounce up. And I think it's still got quite a bit of room to go to the upside here, potentially for another month or so. But I have a feeling it's just going to be a reaction high, and I think bonds could be trading in sideways, and they're not going to be a huge growth play in 2017, especially if rates continue to rise.
Italy's the third biggest bond market in the world. The shape their banks are in, or lack of shape, how does that affect the bond market? Yeah,
I don't know a whole lot about their whole banking, but all I know is what I'm kind of waiting for eventually is for one of these banking crises or one of these situations with these countries to collapse. And, that's going to be the spark that is going to trigger probably gold to explode in value in silver and miners, but also we'll probably see the U.S. dollar take off as well because it's going to be the safe haven. And I don't really follow the details about all the individual banks and countries' financial situations, but what I am following and hopefully waiting that we eventually see is some big crack, some really bad economic news, which is going to send the dollar. We're going to see gold. We're going to see a lot of things rally together. And I talked about it recently, how commodities and the dollar could actually start to rally together in some situations. We've seen it happen before.
Right. Now, of course, with such a surplus of oil in the world, there used to be a time if there was any kind of difficulty in the Middle East, oil prices would skyrocket. That doesn't seem to be likely anymore, considering that North America is self-sufficient.
Yeah, I think the whole oil industry is going to be having a major change, not just so much about North America being more or less self-sufficient, but with new energies coming in, new vehicles, obviously electric. So I think there's going to be I think the shift has already started, and I think that's one of the reasons crude oil is, taking it on the chin over the last couple of years, is you look forward in the future and petro or crude oil isn't potentially the main energy source anymore. So I think a lot of that has been taken out of the crude oil price, and it's going to be discounted out of the price for a very long time. I don't really see it coming back until, I just don't see that crude oil coming back to screaming high prices that we've seen before because of the potential lack in demand for it.
If electric cars do become a lot more common, do we have enough generating capacity, and where will that generation come from, and what will be the power source for it?
Yeah, that's a good question. Obviously, we're far away from eliminating crude oil or petro and being, very heavily weighted on energies like electrical. But, you look at Solar City, the plan they want to do it, they could do a few sections over by Texas area, and they could power, half from all of the United States with this solar system. Over the next 30, 40 years, it's going to be incredible to see this transformation between oil and energy and charging stations. We're far from it, but it's starting, and people can see it, and they can actually, it's not just a dream anymore. It's actually something that is very viable, and that could happen. It's just a matter of getting everything in place. So, we're a long ways out. We're years out, probably a decade out before huge, significant changes take place. But it's coming, and it's going to be a real game changer.
With the price that Ontario is charging for its electricity, I can't see anyone there wanting to change their car from oil to electricity right now. Yeah, potentially, yeah, for sure. It's it's interesting. As I was looking into the whole solar, Elon Musk, I was watching some shows with him, and he was talking about his solar shingles and the solar fields that he wants to use. And I kind of got right into researching it about a month ago, and I thought it was, I think it's really incredible stuff. And then I look here, I'm in Ontario, Canada, and Ontario just passed a new bylaw that it's illegal to go off the grid. So, he's coming out with all these great ideas to become self-sufficient and provide your own energy and have a clean country. And then, of course, our government steps in and says, hey, it's illegal to do that. We want to charge you an arm and a leg for your hydro. It's really ridiculous. It's amazing how all that stuff just goes against the grain. What should be done? Governments they're the worst. Well, I could see a Charter of Rights challenge to that almost immediately.
Yeah, I think it just needs enough people, a big enough movement. But again, the whole going off the grid or, being self-sufficient with the new property that, say, you're building, there's not enough of a movement for it yet. But in time, there will be for sure. I guarantee it'll be challenged, and you can't force somebody to use the hydro. It's crazy.
Well, years ago here in British Columbia, a farmer who had several windmills was putting power down the line, so he claimed hydro owed him. and yet Hydro was still charging him to be connected.
Yeah, isn't that crazy?
So
it's probably a maintenance fee of some sort. They've got to maintain the connection. Who knows? But they've always got their fees. It's ridiculous.
And I'm sure Ontario will do the same thing. Even though you're not using any of their power, you might be putting power down the grid. They're still going to find an excuse to charge you.
Yeah, they always will.
Apart from other safe investments, how are utilities doing since we're talking about them?
Yeah, well, utilities have been doing a lot. They've kind of bottomed out in November, about a month before we saw gold and bonds start to bottom out. Utilities are seen as a safe haven play. They're interest rate sensitive, so obviously our rate hike and the jump obviously really kind of we got lift off with that. And going forward with more rate hikes expected in 2017, I think the utility sector looks pretty ripe. It's got a beautiful bottoming formation and inverse head and shoulders. Today it's testing those resistance zones where if it was to close above this inverse pattern today or tomorrow or really anytime this week, it's got a bullish buy signal that, we could see a decent, 8-10% gain in that whole sector very quickly within a week or so. So there's a lot of money moving into those safe haven plays. And, we've seen the VIX actually kind of creep up here over the last couple trading sessions. And even though the S&P 500 or the main markets are kind of just trading flat, the VIX has been creeping up, jumping 10%, 11% back and forth here, even though there's no real volatility. And all that's saying is people are starting to hedge and bet against the market. They're getting scared it's about to drop. And that's exactly what they're doing. They're moving to gold, bonds, and utilities, trying to sidestep the broad stock market having a quick little correction here. So that's kind of just where we're at. It really shows you where the market sentiment is. It has been like that for the last 4 sessions, and I think it'll probably be like that for a couple more sessions. But I think equities are about to have a little pop and rally, and we're going to see gold and the safe havens have a little bit of a pause here because they've had a pretty nice run in December and January.
In that kind of a situation, what's a better bet, gold bullion or gold stocks?
I always like actually a mix of both. Gold is kind of, they move very differently. Gold miners will lead gold prices, and so which means they jump and they lead to the upside, and they happen in a blink of an eye. So it's hard to get a good entry. And when they top out and reverse back down, they also do the same thing. One big red bar, you blink and, it gaps lower the next day. Gold, on the other hand, is a little slower. It's delayed. So you can kind of get following the miners, you get that 1 day kind of leading indicator. So you can get positioned into gold. And when they're underperforming the miners and they start to reverse, then you start to move out of gold. So, I like gold. It's slower. It's more conservative. You can trade more money with it versus really fast-moving gold mining stocks. So I kind of use the mining stocks more or less like a leading indicator for trading gold.
Chris, anything else you want to add today?
No, I think we pretty much covered it all. The grand scheme of things, the bottom line is it looks like precious metals, safe havens are going to have a little bit of a pause here. And I think we're going to see the equities here probably continue to push higher in the near future.
Thanks a lot for chatting with us.
Always a pleasure, Jim. Thanks for having me on the show.
My guest has been Christopher Vermeulen. His website is thegoldanoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.